Silver just had one of the most extreme moves in modern market history, ripping higher, then snapping back in days. So what's actually driving this rally? Industrial demand, monetary fear, a structural supply deficit, or pure speculation? In this video, we'll break down the forces behind silver's surge, what usually happens next after moves like this, the big historical boom and bust cycles, and the one reason this rally might be different.
Okay, so first things first, let's set the scene. Before we can even touch the why of it all, we really have to get a handle on the what. And what we saw, well, it was a market moving with just incredible force in both directions. I mean, silver went on an absolute tear. The gains were just eye-watering. It really felt like the momentum was unstoppable, you know? But then, bam, almost overnight, the whole thing reversed in this incredibly violent drop. And honestly, the speed of that fall was every bit as shocking as the climb. So what was the actual trigger? What lit the fuse? Well, what you're seeing here is basically the classic playbook for a commodity shakeout. It's a chain reaction. Step one, the price just rockets up, right? That brings in all the traders using leverage, borrowed money, to make their bets even bigger. Step two, the market gets white hot and the exchange starts to get nervous. So what do? They hike the margin requirements to try and cool things down. That's step three. And step four, well, that forces all those leveraged traders to either cough up a ton more cash or, what's more likely, just dump their positions. And that forced selling, well, it just triggers more selling. It's a brutal cycle. And just so we're all on the same page here, what is a margin requirement? Think of it like this. It's basically the security deposit you have to put down to trade with borrowed money. So when the exchange jacks up that requirement, it's kind of like your bank suddenly calling you and saying, hey, we need a much bigger down payment on that loan right now. It forces you to sell stuff to come up with the cash. And in this case, the stuff they had to sell was the silver itself. Okay, so we've got our trigger, the margin hike. That explains the crash. But that doesn't explain why the market was so supercharged to begin with, right? Why was there so much fuel in the tank? To get that, we need to dig deeper and look at the three powerful core drivers that were pushing this whole rally forward. And here's the thing you have to understand about silver. It's kind of got this split personality. It's not just poor man's gold, not at all. On one hand, yes, it's a precious metal, a safe haven asset for when things get dicey. But on the other hand, it's a critical industrial metal, just like copper. And they're really explosive. They're truly historic moves. They happen when both sides of its personality are in crazy high demand at the exact same time. And, wouldn't you know it, that is exactly what happened. We had a perfect storm brewing. Check this out. Driver number one, a serious supply squeeze. For years, demand has been outstripping supply. Driver two, insane industrial demand, all thanks to the electrification push. We're talking solar panels, EVs, all the new data centers. And then driver three, you've got this huge wave of monetary demand, with investors looking for a hedge against inflation, weird stuff happening with currencies, and just general geopolitical chaos. It was like a three-front war pushing prices higher. Now look, a strong fundamental story is great, but it's not enough to get the kind of vertical, parabolic move we just saw. For that, you need rocket fuel. And for silver, the rocket fuel is always leverage and the flood of investment money. And that's what we saw. Money just poured into silver, especially through things like ETPs, exchange-traded products. They're basically funds that trade like a stock, but they hold actual physical silver. So as more and more money flooded into these ETPs, these giant, concentrated positions started to build up. And that puts a real strain on the actual physical supply, especially in big hubs like London. See, you got to remember, the silver market is way smaller and thinner than the gold market. So when big money moves in, it creates these massive, outsized price swings. And this quote it absolutely nails it. In a tight market, flows can matter as much as fundamentals in the short run. And it's so true. When the market is already stretched thin, the flow of speculative money can just completely hijack the narrative. Suddenly, the story isn't about supply deficits or solar panels anymore. It's all about who's getting squeezed and who's being forced to buy or sell this very second. So, as wild and crazy as this all feels right now, here's the kicker. If you zoom out, you realize we've kind of seen this movie before. This isn't a new script for silver. The metal has this long history of these exact kinds of insane boom and bust cycles. I mean, just look at this timeline. Go back to 1980. You had the Hunt brothers trying to corner the market, sending prices to the moon before the whole thing collapsed on what's now called Silver Thursday. Fast forward to 2011, right after the big financial crisis. Silver does it again, goes on this insane parabolic run-up towards $50 an ounce, and then crashes. And now here we are. The 2025 rally and shakeout, it fits the pattern perfectly.
Yeah, and if you look closely, all of these episodes, they share the same DNA. You have an exciting story that just starts to accelerate. Then the speculators pile in, making the trade super crowded. Volatility goes completely nuts, and then the end comes. It's always this sudden air pocket drop, where all the buyers just disappear, and the price falls through the floor. It's the same pattern over and over again.
Which, of course, brings us to the million-dollar question. Is this time different? Was the 2025 rally just another classic silver bubble that has now officially popped? Or was it the start of a whole new era, and this crazy shakeout was just a bump in the road? You know, the most honest answer is probably it's a little of both. On one side, what's similar, the extreme speed of the move, the breathless headlines in the media, and that classic margin call flush out. History's pretty clear that these moments absolutely punish anyone who shows up late to the party. But then you look at what's different. The bull case this time around feels much more layered, right? It's not just one speculative story. It's that whole trifecta of supply, industrial demand, and monetary hedging. Plus, you have these modern ETPs that give so many more people a seat at the table, which can make the moves even bigger. So maybe the best way to think about this is to look at it through two different lenses. If you're a short-term trader with a horizon of a few weeks, you have to expect just violent, choppy, back-and-forth action. Your focus should be on volatility, margin changes, and where the speculators are positioned. But if you're a long-term investor looking out months or years, this whole thing is really a vote on the bigger macro picture. Will that supply's tightness stick around? What's the deal with real interest rates? Where's the economy heading? Totally different set of questions.
And I think this quote here is the perfect way to talk about what just happened. Consolidation doesn't kill a thesis, it resets it. A painful, violent shakeout like the one we just saw, it doesn't automatically mean the bull story is dead. What it does is it resets everything. It flushes out all the weak hands and the crazy leverage, and in a way that can actually build a much healthier foundation for whatever comes next.
So, where do we go from here? What should you be watching? Okay, here's your checklist. Number 1, keep a very close eye on volatility levels and any talk of more margin changes. Number 2, watch the positioning data. Has the crowd thinned out, or are they still all in? Number 3, don't forget the big macro picture. Real interest rates and the US dollar are key. And finally, number 4, look for signs of tightness in the actual physical market, things like premiums and lease rates. Those are the signals that are going to give you the clues for what's coming next. Because at the end of the day, you have to remember the asset we're talking about here. This is silver, and it is absolutely famous for breaking hearts. In both directions, it'll give you incredible euphoria on the way up and just pure pain on the way down. So if there's one big takeaway, it's this. The fundamental story that powered that 2025 rally, it was real. The supply issues, the demand, all of it. But that brutal shakeout was a very powerful reminder that in the short run, when leverage takes the wheel, fundamentals can go right out the window. Silver is, and it seems like it always will be, an incredibly leverage-sensitive market. So what was it? A bubble that just popped? Or a big breakout that's just taking a breather? Well, the truth is the jury's still out on that one. But now you know exactly what signals to watch to help you figure it out for yourself.